It's very honored to be here to introduce a brief venture capital market in Korea. Due to the time limitation, my presentation will be very short and be very briefly to introduce about the summary of the venture capital market. Today, I'm gonna talk about venture capital market of Korea, and my topic is as following. The first one, I'm gonna introduce the famous the platform in Asia, and second, I'm gonna introduce you investment stage in Korea. And third, venture capital market, how is the venture capital market going in Korea? And the last, the most important part of the investment is the exit, how to get your return highly than other competitors, right? So my last topic will be the exit strategy in venture capital market Korea. First of all, you all know about these apps, right? Some of you guys, when you go to travel, you can book an apartment through the Airbnb, or you can take a Uber from the airport to your destination. You can use Grab in the Asian region, and you can use Wonglai when you want to read an online review of the restaurants or other shops. You can use text message through the Line messengers. These all apps are very famous in Asia, but they have a very common characteristics. First of all, they started from the very small company, except for this one, the Grab, because the founder of the Grab is very famous guy. Except for that, all of these apps have started from the very small company, and they still making literally no income or low income. They are hardly making any cashes on their businesses. And second of all, they invest a huge amount of money in technologies or marketing, because they have to compete with other startups to gain a higher market share, which will make a profit after all. And finally, they have to raise funds to maintain or sustain their business until they're making a proper profits from their operation. So to make this famous app, we have to invest in the early stage, which is accelerating or the venture capital investment. This stage you are very familiar with is divided into 4 different stages. The first stage we call seed investment or accelerating investment. And second of all, we call it early stage investment, and later stage investment. And the last one is before the public market, you can invest on the last stage, which is called pre-IPO investment. These all investments divided into like this kind of things. First, a seed or angel or accelerating investment are coming from most of the cases your families or your friends of the entrepreneurs or the accelerating companies are invested in this kind of stage. And their amount probably around $20,000 US or $50,000 US. They're gonna gain 5 to 10% of the shares of the venture startups. And later that, after they making a feasibility of their businesses, venture capital company are starting to look up these startups and they want to make an investment. That stage we call it early stage investment, like pre-A or Series A investments. In this stage, usually about $500,000 US or above will be invested in this stage. And normally Korean investors like to prefer stocks at this stage. I'm gonna explain it later why, and you just have to keep in mind why Korean investors like prefer stocks. The later stage we so-called from the Series B, C, D, or any other stage is like we call later stage investment. This usually invested by venture capital company or wealthy individuals or corporation or even asset management company, as I belong, are investing in this stage. Their amount like above 100 million US dollars. The last stage is pre-IPO investment. When the company are making a profit and their business is very strong, they wanted to list it on the public market. And before that, investment banking or asset management company are invest in this stage to gain a capital gain. This is participant of the startup's environment. Most of the cases, as you can see, GCCEI, the government organization, providing them a funding or consulting or giving them a investment-friendly policies for this company. And investors, of course, they give them investment money or consulting, mentoring, and they even give them a connection to the large corporation so they can get a funding or market channels overseas or in domestic market. And the last one is service providers. They're going to provide operation. They help this startup operation in HR or their administrative functions. Usually Amazon or Dropbox, Slack, those kind of company provide them service. This is typical structure of the venture capital funds. The GP, venture capital company, make a plan to establish venture capital fund, and they have to find investors like LP investors, which is sovereign wealth investment or pension or banking or investment banking. They were gonna participate as LP investors in this fund. This is venture capital companies in Korea. From the 2014, the venture capital companies steadily increased. In 2018, as you can see, around 150 companies are existed. As the venture capital companies grows, the fund also grows. The last year, as you can see, 2018, almost 1,000 funds are existed in Korea, and their fund amount is almost 28 trillion Korean won, which is 200 billion US dollars, I believe. And their investment amount grows steadily. Since 2014, the amount in 2018 became a double, and their invested companies also around 1,400 companies are invested by venture capital. When they invest, as I mentioned, they like to invest in the preferred stock. You might have heard RCPS, redeemable convertible preferred stocks. This is very typical investment type in Korea because Korean investors are very risk adverse characteristics. So they want to hedge every single risk. Even though this company cannot be made it to the public market, they want to repay by the founders of these startups. So they prefer preferred stock. As you can see, over the 50% of the investment occurs in preferred stock. These are the investment sector in Korea. The most famous sector is, as you can see, biomedicals and ICT service, logistics service. But Korean government believe, and I believe, biomedical sector will be the next generation of our country's industry because as people grows, they have to take a medicine and regularly. And the population grows. The needs for medicine also became bigger. So I think the biomedical sector will be most attractive to investors nowadays. Also, ICT sectors like messengers or online platform for car sharing or delivery, which is very profitable when they make feasible clients like users. The most LP investors in Korea is, of course, government organization. I don't know you guys heard of these things. We called it mote funds. Mote means like mother. Korean government created mother fund to invest in this kind of venture capital fund. So it occupies almost 30%. And second of all, the financial institution, investment banking, bank or pension, insurance company, these kind of financial institutions are also invested in this venture capital fund because last time I checked, the base interest in Korea is 1.5%. So insurance company or banking cannot make a higher profit through this kind of interest. So they wanted to take a risk to gain a higher return. The last one is exit strategy for venture capital fund in Korea. There are 4 different types. The first one is IPO. You can sell up your stocks or shares through the public market. This is very typical in Korea. The second one is M&A. The large corporation or the unicorn company can acquire these startups to gain market share or their technology. A private equity fund also acquire this kind of startup to make complete their investment portfolios. The third one is secondary sales. The investment of the venture capital can sell up to another venture capital funds or business development company, which will be soon established in Korea. It provides liquidity to the startups, and they can provide a consulting, those kind of things. It's operated by venture capital fund or investment banking, or even the asset management company can provide liquidity to these kind of startups. So they're gonna provide a lot of investment money to startups. The last one will be redemption. As I mentioned, our CPS investment type. The last thing the investment believe the founder or the startups can repay your investment. So the last exit method is redemption. All right. As you can see, major exit strategy is aftermarket sell-off or redemption in Korea, over the 50%. And the second one is, of course, IPO. But the IPO is not a good option to venture capital fund. I'm going to explain why. Mostly, startups company in Korea wanted to be listed, or they're going to list it in Kosdaq market, which is a Korean version of Nasdaq. The highly technology company are listed in Kosdaq, but required time to list it in Kosdaq needs over 15 years. The last year, you were gonna take 17 and 4 years to be listed in Korean Kosdaq market. And most of the investors in Kosdaq market is individual investors. As you know, individual investors are not pursuing the value of the stock, they're pursuing price of the stock. So it is not a proper method to get a reasonable valuation in Kosdaq market. So Korean government want to try to encourage M&A method or another method to exit this investment, but right now most of the venture capital fund, because of the convenience, they wanted to exit through the redemption or the IPO. To sum up, this is too large. I'm gonna I'm gonna send you PDF if you want. You can give me your business card or something. And this is like, I'm gonna sum up this way. Korean venture capital market is highly attractive for many investors, and Korean government want to stimulate this venture capital market for their own goal. Korean government want to encourage or stimulate the biomedical technology, aerospace, or ICT sector to prepare the next generation. And that is why they want to invest highly money on venture capital funds. But there are three different laws regulate the startups and venture capital fund. It's too complicated for investors or startups to understand the laws and regulations. So you need Korean government have to unify these laws and regulation into one form, so everybody can easily understand. And they have to ease the regulation, because right now the investment agreement is regulated by the Korean law, not by their between agreement. So Korean government have to ease the regulation about this agreement. And Korean government also have to give tax incentive or another kind of incentive to large corporations when they acquire startups. Right now, it is not that tax benefit for them. So M&A market in Korea is not that big right now. Thank you for listening, and I hope you guys enjoy this time. Thank you.